Make sure you're in the right room. We are going to be talking about buy now, pay later today, sometimes called pay in four. And we've got both a viewpoint from a vendor perspective. I represent Galileo Financial Technologies, as you guys know, running product strategy for Galileo. And I'm joined by our client, SoFi. I'll have Kelly introduce herself, and we'll talk about it from both the client experience as well as from the vendor experience.
Great. Well, thanks for coming. I'm Kelly Keogh. I'm relatively new to SoFi, having joined just this year. I am responsible for our checking, savings, investment, insurance, credit card, and partnership businesses. And so if you think about that, that's really our transactional businesses that really drive the daily engagement of our SoFi users, and now is responsible really for bringing in over half of our new members into the firm and into the company. And our goal is to create that holistic financial services experience and get your money right. And so today, well, as we talk, it'll be interesting because I think I can give a little bit of a perspective if you think about somebody coming into the checking experience, but then also comparing that to the credit card experience, and how do we help people navigate between those two, having the opportunity to see across these different parts of our experience and products.
So Galileo got into this space. As many of you know, Galileo began life in the card-centric payment world and has been expanding its offerings quite rapidly, maybe not as rapidly as our friends on the SoFi side, but as we entered into the world of credit and lending, the blending of the payments world and the credit and lending world sort of made our first foray into this space as a buy now, pay later. Because I think most of you understand that buy now, pay later is a great example of what we call a modern combination product, right? It takes the best of the payments world, deposit world, the lending world to create something that didn't quite exist before and has obviously exploded as the industry adoption around the globe as one of the favorite ways that people buy their goods and services, mostly online, but now also in physical stores as well. So this was a natural place for us to grow into. You may recall that early last year we bought a company called Technisys, which gave us a new lending platform that we could lend to help build out this service. And then our first customer to go to life was SoFi itself. So buy now, pay later is evolving in various ways. And we're going to talk about how buy now, pay later and the whole pay in four industry is changing and growing. And it's no longer limited to what most people have in their head of what they mean by buy now, pay later. And it takes on interesting forms. And SoFi is actually a really interesting example of that. And the other great thing about SoFi is that most of you guys are familiar with the brand names like Affirm and Klarna and Afterpay. And these were really sort of fintechs. Yeah, they may have gotten a state consumer finance license or money transmitter license, but they were not what you think of as traditionally as a bank, right? And now we're starting to see the banks really interested in this space as user adoption has taken hold. And SoFi, of course, has got their banking charter now, and it's really interesting to see how banks are adopting this. And so with that, I'd love for you to first describe a little bit about what made SoFi even want to launch this type of offering, and then if you could describe sort of the unique way that SoFi goes to market with this, and what does it look like?
Yeah, so we definitely were getting demand as our consumers were experiencing these other products from these other companies. And if you think about what they're really also wanting to do is consolidate that experience, be able to see what they've spent in the same context where they can see what they have, and to be able to do everything in one place. And so that opportunity really allowed us to think about how do we bring buy now, pay later and embed it straight within the banking experience that we've got, the core checking experience. So we launched not quite a year ago with a pay in four solution that is, I would say, our initial foray into it. And right now, up to $500, it allows a consumer, we actually pre-screen. And so you go into your app, and we've already identified you if you are qualified. That is a really important differentiator in that we know that you have the wherewithal, you have the account balances, you have the income to be able to sustain that $500 over that period, that 2-month period. And so that helps us, I'd say, get more visibility and also help the consumer so that they're not getting in over their skis. So $500, pay in four, immediate installments. They can set it up to direct pay in an automated way directly from their checking account. We see actually 34% of our consumers have done it more than once. So, let me describe this experience a little bit more though. So once you sign up for it or you see that you're enabled for it, you can sign up for it and that card instantly goes into your Apple Wallet. So it allows you to then use it. It's a MasterCard limited use card in your Apple Wallet that's accepted by a really wide range of merchants. And it allows you to then just basically use it as you would with a credit card or a debit card in terms of entering the numbers or be able to use it through Apple Pay. That way, super easy. It's, that instant enablement for them. And then we know that people, though, they like it. They're using it, 34% are using it a second time, but we don't let people stack cards. And that's an important part for us too, is to be able to do this in a way that satisfies the desire to have it integrated with your checking, to have it very easy to use with a broad range of vendors, not just within a point of sale of a specific merchant, but then also we've got their back and we're not letting them stack up debt. We see that externally where people are taking on multiple cards and taking on more debt than they probably knew that they were.
So there's a lot to discuss.
Yeah, there's a lot in there.
I'd like to actually start with one of the first things you said, which is that customers were coming to SoFi and asking if a buy now, pay later or a similar type of solution was coming down the road. One of the things that we know from industry research is about 53% of buy now, pay later users are 35 and below in terms of age. So it's very attractive to the millennial Gen Z sort of segment. And I think that marries up very well with the SoFi segment. And I wonder if you can describe a little bit of, I know it's constantly evolving and changing, but the original SoFi segment does kind of match that cohort, right?
It does. I would say it actually maps more onto our broadening cohort that we've been able to reach now that I have a national banking charter and we serve a broader range of individuals through our checking and savings. And so what does that mean? So SoFi historically, as you know, came from a lending background and student lending. The advantage we've had is that we've right to a very specific credit box of highly qualified, high income, high FICO individuals. And that's awesome, but they also have a lot of access to credit. And so if you think about then, once we launched our national checking account, what we did is we opened up our acquisition to a broader range of individuals, still attracted to the brand and that younger demographic, but we're not quite as narrow in terms of who we're attracting. And so that allowed us also to be able to then bring products that maybe, let's say you don't have the top credit score, but we know you have money in your checking account, we know you still have income, still give you access to being able to make a larger purchase and to be able to spread that out. So it actually, I think, allowed us to serve a slightly broader range of the audience that we're now starting to attract through our larger offering.
Right, which I think is important because we also know that in the broader buy now, pay later industry, particularly in the US market, a lot of these, because they're younger, about 25%, just over that, are what we call unscorable because they haven't yet built up the credit file that they need in order to qualify for other types of credit, a credit card or a personal loan or other types of purchase finance solutions. And about just over 50% of those of the broader buy now, pay later community are actually subprime or near prime, right? And so what's interesting is that this is then allowing you, traditionally you've had customers that have very nice credit scores, if you will, but allows you to go a little bit broader in either direction and reach a new customer base.
Yeah, a little bit broader, but I will dare say that we've also been pretty careful in terms of, and that's why we do the pre-screen approach. And you are basically pre-qualified for having the card up to $500, and we know who you are and what your pattern has been. And so even though it's allowed us to widen, we're still very careful in that space, and that's good for us, and it's good for the consumer, because we know they have the wherewithal then to pay it back.
And this is why we've always believed that even though banks might be second movers in this space, banks are uniquely positioned to kind of win in this buy now, pay later purchase finance space because of the data you already have on your customers. That allows you to make these credit decisions that the original fintechy buy now, pay laters didn't have access to that. They weren't making credit decisions on traditional credit bureau data. They didn't have a history of repeat customers when they first started. And they were either forced to use alternative data or just take a chance, basically. So I think banks are uniquely positioned. They have an existing customer base. They know the behavior of their customers, both on the deposit, lending, and payment side, and you can use all that to make intelligent credit decisioning. On top of that, SoFi and many banks have already a lending department. So you already have the lending operations, the collections and recovery, to manage delinquency and default. You've got every piece you need to manage a loan. This could be just another loan on top of your existing loan portfolio, leveraging all those operational teams and infrastructure that the other players had to build out over time or work with partners in the background to make that happen. So I think banking is uniquely positioned to ultimately dominate this space. One of the other things I wanted to highlight, the original buy now, pay later, right? It took a lot of effort for the Klarnas and Affirms and Afterpays of the world to go around to literally millions of merchant websites and get that additional checkout button that sits next to MasterCard and Visa and everybody, PayPal and everybody else that's already on the page. What's really interesting here is that it's a card. It's instant issue card, often into your digital wallet. Which you highlighted a couple of things which are quite attractive. Number one, SoFi, you might change your mind later, doesn't need to go to every single merchant site and have a checkout button. The second thing is, because it's a credit card, you can use it in a variety of shops, not just at the merchant that you're shopping at now, or a lot of these guys, right, they've created their own little sort of marketplace. You can have a Klarna marketplace and an Afterpay marketplace where you shop within that. They're sort of forcing you to shop within their environment. You can shop at any store, also in the physical world, because you can also tap to pay with this virtual card. So is that a way SoFi thought about getting into this space without having to spend enormous amounts of time creating all these merchant relationships and delivering all these buttons?
Yeah, no, definitely. I mean, I think we have a strong partnership with MasterCard as well. We have had that partnership throughout kind of the whole company, especially on our credit card side, but that also, they were very interested in this space. And I think the creative solution that we came up with really gave us that opportunity to get it to a broad range, to be able to make it more useful for our consumers. Here, the other thing is you don't need to know what you're going to use it for. You might know what you're going to use it for, but you also might know this month's going to be a little tighter and I'm going to have to spread some stuff out. And you can provision the card and then choose to use it later or at a merchant when something comes up. That gives the end user a lot more flexibility than needing to do it right in that point of sale. Now, I won't say point of sale is definitely interesting. If we do ultimately do more point of sale work, I think it would be very specific. As opposed to needing to find 100,000 partnerships with every merchant out there, because I do think by having the card provisioned for a range of merchants, it gives us we just don't need to do that.
Right.
The only I think we would do it if we were able to provide value throughout a whole chain. So if it's a space where you can purchase maybe at a benefit by being a SoFi member, also you would have the ability potentially to do pay in for there. Maybe it could be a whole bundle of within that experience, but we would do that very selectively. So if we think about the future, I won't say we won't do point of sale, but this has really made it so that we don't have to do point of sale.
Right. You brought up an interesting comment there around what we're seeing generally in the buy now, pay later industry is a couple of things, actually. One is, especially for younger cohorts, they are gravitating actually away from credit cards and other ways of doing purchase finance. Sometimes they watch their parents get into debt, or they think that credit card terms are onerous for them, and they want to just avoid all of that. So they turn to buy now, pay later. But we're noticing it's not just for individual purchase, spontaneous purchase, whatever. You saw something on Instagram and you buy it immediately. It's also becoming part of the way they manage their own personal cash flow. Very similar to how credit cards evolved, but their preference is actually buy now, pay later and not using a credit card. So it's actually becoming a day-to-day way to manage their finances. The other thing that you touched upon, right? We're seeing this whole buy now, pay later world. It all began at that point of need, right? At the point of sale. And that was the most successful place to start, but we're branching out into what I call the pre-transaction and the post-transaction world, right? So the SoFi model is actually an example of you proactively apply for it and then you go shopping. So that's kind of a pre-transaction model. We're also seeing banks do it in what I call a post-transaction model. You probably all experienced this in your personal life, right? Where your credit card company sends you your monthly statement, or you go online and you view the transactions, and then they give you an offer, right? Like bundle one or more of these things together and turn it into almost post-transaction buy now, pay later installment loan. Do you know if SoFi is going to be exploring other flavors of buy now, pay later? You know, SoFi also has a credit card business and other businesses that lends itself to this quite nicely.
Yeah, no, definitely. I would say we're early in this journey, and we work with our regulators too to make sure that each step is approved as we go along the way, in terms of scale, eligibility, the criteria, the size, the length, the number of payments, and so forth. You'll see us, I think, over time start to scale into and bring a broader range of opportunities or options to the consumer, including potentially post-transaction. I would say we do a lot of education. I don't want credit cards to be sometimes what happens in these conversations is credit card is the evil. Buy now, pay later is awesome and credit cards are evil, or you could flip it and write the other narrative. And the reality is both have purposes. And so we actually spend a fair amount of time trying to also educate people on the differences between the two and why you might think about using credit card for purchase versus buy now, pay later, or buy now, pay later and credit card. We have an awesome blog on that specific question and the pros and cons of each one and what situations you might want to use each one in. So to me, it's really about helping educate the consumer, because they both have their place, and we really need to make sure that we help make sure that people can spend their money better. That's what we're trying to do.
I love the fact that you've talked about a number of ways as SoFi gets into this space, including preventing people from stacking buy now, pay later loans on top of each other and getting into debt, right? They started using this mechanism either because they were denied a traditional credit like a credit card, or because they didn't want to use credit cards. But because it's harder to see the full usage of your buy now, pay laters across multiple sites, they were ultimately getting into some of the same problems, that credit card number, and getting too far into debt. And SoFi, you mentioned earlier that SoFi actually prevents you from stacking.
Yeah, you have to pay off one before you can even become eligible again for another one. So, and it's not instantaneous either. There's a little bit of delay. I mean, and that's actually on purpose, is to build a little bit of that friction in, because it's not meant to be something you can just keep churning and churning and churning. It's meant to be a tool that allows you to spread your spending out and do that thoughtfully.
And I think the second way you described, which is amazing, is around that education, advice, and guidance. You know, SoFi having personal loans and credit cards and buy now, pay later, but educating especially the younger cohorts on what's the difference between these and how do you sort of self-manage your use of credit so that you don't get yourself in trouble. And I don't know if any of you are SoFi customers, but you are probably getting a lot of emails and such that, and a lot of invitations to webinars and things where you can learn about all these products, which is not something every bank does, is step into that foray of advice and guidance and learning how to be a good financial manager of your own funds.
Yeah, I mean, some would say, well, it's in a bank's best interest to keep that, not best interest, but in their self-interest, to keep having people take on different forms of debt. The reality is that's not in our best interest, nor is it in the consumer's best interest. And so we actually really carefully manage, and we know how much debt you have on your credit card, student loans, what are your terms, what's your income, what's the personal loans that you have. Those all play a role in, are you eligible for buy now, pay later? Are those play a role in the credit line that you get on your credit card? And so that for us is really important, and I think that helps that we came from a debt background, that we really started as a lending company and wanting to do that in a really smart way that was sustainable. That's actually how we've been approaching each of these products.
Right.
And that's a little different than some of the marketplace.
Right. Now, we've also seen an interesting trend in the industry that buy now, pay later users, and interesting, your statistic that you gave earlier, 34% reusage, is higher than the industry norm. It's around 25%. So SoFi repeat users of buy now, pay later is actually higher than the larger industry. But the regular users or super users of buy now, pay later are actually improving their credit scores, which is kind of counterintuitive. We're seeing derogatory marks and delinquencies go down. And we think that's actually because a lot of these loans aren't being reported to credit bureaus. So one of the things that's actually starting to take place is the big three, right, Experian, TransUnion, Equifax, are starting to collect data. And they're keeping it to the side right now because they're trying to figure out what will ultimately this do to one's credit score. Some of them are even considering, having a separate credit bureau just focused on buy now, pay later. Others are trying to figure out how do we integrate it into your broader credit world. You have the luxury of just using some of your own data, but do you see SoFi ultimately plugging this data back into the system, back to the credit bureaus, and using the decisioning, using that data for your own decisioning, but also helping the broader lending community?
I think we all win by doing that. That's the reality is. I do think the other side of the coin is while these don't necessarily help build your credit score right now, they can hurt. And that's something I think that people think, oh, buy now, pay later, it's not reported to the agencies or it's not part of kind of the whole credit score thing. But the reality is if you don't pay that off, the negative side of it does go. And so I do think there's it feels like they've been set aside, but that's only on the side of does it help you really build credit and are you taking, does that debt get reported into the agency? Well, it does if you don't pay. So that's something to remember.
The other thing that we're noticing of the early movers, right, again, Afterpay, Klarna, et cetera, they all began in this sort of 4 to 6 week pay in 4 window, and a lot of that was kind of gaming the system, right? You're staying below the Truth in Lending Act and some of the other regulatory requirements out there. But they've all since expanded, right? So now you have sort of pay monthly options that are interest bearing, and they look a little bit more like a traditional personal term installment loan. But they've had to do that, not being banks, right? They've had to actually do that with partner banks or sponsor banks in the background. SoFi being a actual bank, right, with your own license, your own charter, this gives you some flexibility to continue to evolve your model as you move forward and experiment with this. Do you see yourself also having more variations of the term installment loan to go beyond the short-term pay in 4?
Yeah, definitely. But we're going to step in this very carefully, and that's the way that we do things. We learn and iterate constantly, and so what's really important is that we understand who's paying, making sure we're not extending credit to folks, and using those learnings in a very controlled, small dollar way right now to help inform us as we go forward. So, yes. And we will do that very carefully in very measured ways, and that has been our approach in lending all along.
Perfect. I know we have a SoFi guest here, but just quickly on what we're seeing some of the other financial institutions do. We see some very large banks actually trying to get into that, re-enter the sort of merchant acquiring, merchant services world, like Chase Pay and Citizens Pay. It's a big effort. You may have seen Chase Pay actually back off of putting point of sale QR code readers in merchant stores, so it's non-trivial exercise, and that's why the SoFi model is so interesting as an easier way to get into this space. We're also seeing them specialize around specific sort of industries as buy now, pay later moves even beyond consumer into the small business world, for example, and people specializing in specific industries and inserting even private label buy now, pay later solutions into merchant sites. So we're seeing a lot of interest from the banking community as we move forward, and even some of the biggest names out there trying to figure out how to get into this space. What's interesting, though, is that almost all of them are working with a third-party vendor to bring this to life. And so, at Galileo, we definitely have our competition set out for us. I would be curious, though. I know everybody is kind of not an unknown secret, right? SoFi and Galileo are two sister companies under the same bank holding company. But what was your experience like in working with Galileo and bringing this thing to life? Because from my perspective, we launched it very fast. So,
yeah. So, in full disclosure, most of it was built before I started.
Okay.
So, but the team that launched it is still with me, with us, and is managing the offering right now. And so, super fast. Three-way partnership worked really well between SoFi, MasterCard, and Galileo, which really, I think, helped bring this to life and create kind of a seamless and pretty frictionless experience. What was also really good is I think we had clear definitions of the roles. So SoFi owns the user experience, the risk policies, the decisioning, the provisioning of credit, and so forth. That is all on the SoFi side. For Galileo, then being transaction processor and loan servicer, I think that really helped because each of us have our lanes. They're totally connected and we're interdependent on each other, but it also really helped us, I think, each do what we do well. And so that, I think, was, really a good part of the model and also allows us then, as we think about expanding, what we would need to do with you, what we would need to do on the SoFi kind of UX experience or expanding our underwriting model and so forth. So it helps us, I think, having those clear roles and managing the offering as well. So stood it up really fast, totally within the tech stack between SoFi and Galileo. It was one of our, I think, top implementations and one that we're continuing to build on.
Right, and just so you guys are aware of the breakdown in duty.
I'm their customer.
Right.
So, yeah.
They're also enabling the customer experience, right?
Yeah.
So it's SoFi's own web banking channel and mobile banking channel, so the end customer of SoFi's experience, and then APIing their way back into the back-end processing at Galileo, where the sort of loan account lives in our core processing solution. We also wrap this with our payments risk platform, which helps with things like fraud detection and other types of financial crimes mitigation. We provide clients like SoFi a lot of data analytics so they can see the trends that are going on, and we're going to increasingly grow what happens in the so-called back office, right? Both from an IT operations perspective as well as from a business process operations perspective. And that allows a nice sort of separation of duty of customer experience and then some of the heavy lifting that goes on in the background that not everybody wants to own that particular piece of the puzzle. So
it also gives variability to the offerings.
Yeah.
So we have chosen to implement this in a very specific way that's consistent with the way that we do lending, the way that we do our customer experience. If you chose to, somebody else chooses to work with you in different ways, that's totally up to them. But a couple things I just want to comment on the user experience, because it sounds like it could be kind of clunky, the whole concept of pre-provisioning the card and then using that card to go shop. And because I was actually a little surprised. And when I first learned about the experience, thinking, wow, that's a lot of thought ahead of time that you actually have to do. You can do it right away, but also we do see that 83% say that it was very easy or extremely easy to be able to use our pay in 4 solution, and the satisfaction, the top 2 box satisfaction, 78% in just the first couple months when we rolled this out. So we'll continue to make that even better, but I dare say I was actually pleasantly surprised that the virtual card experience that you are pre-provisioning is actually something that people find easy to use, and then the verbatims we get are that they really are happy, they feel like SoFi has their back, and they trust us for their banking, and so they actually are transferring that trust to the Pay in 4 solution. And I think that's a little bit in opposition to, in some cases, with other companies that they just don't know about or they just haven't done business with before. And so they feel like, this is part of what SoFi's got their back. They've already chosen to work with us for their banking, and this is an extension of that trust then for them.
I love that you brought that up. It shows actually that millennials, more than any other cohort, they trust their bank and they want to do more with their bank and they want to see banks having buy now, pay later. So that falls in line exactly with what you were just describing, that they actually want to get this from their bank versus some third party or fintech provider. So that's a really interesting statistic. To your point, right, the whole solution is, because every bank will deploy this in their own unique way. So the whole solution that we had to develop wasn't just unique to SoFi, it is fully configurable. It has parameters that allow every bank to configure this to be, whether that's duration of the loan or the fees and rates that you want to charge, or all the things you can imagine that would make your bank's unique situation different from everybody else's, has to be built into the platform. So we have to scale for different volumes, we have different parameters for different clients, that has to be into the solution, so 100%. But yes, I'd be curious though, so it sounds like after they become a buy now, pay later user, they love it. But was it tough? Like, what did you have to do to get the word out that there's, your product velocity at SoFi is very high, number one. But here's a new offering. How do you stand out from the noise and create sort of the awareness that this new offering exists?
Yeah, well, I mean, first of all, the most important way and the best way to actually make somebody aware of a new capability is to embed it right in your flow. You can send all the emails you want, you can send all the texts and notifications and put banners on your site, and people will just scroll past that. But this is actually, when you're right in your checking account, there's a little banner that lights up that says, paying for, so like, I think it's authorized card or something like that. It's much shorter and punchier than that. I was going through the experience this morning. And so it's right there in the options of recurring payments, sending money to a friend. It's just one of the capabilities that's built right into your checking account. So that is, in my experience, as well as what we're seeing at SoFi, the best way to make people aware is to make it really a feature and prominent in the workflow that people are in. And then, of course, we have done, SoFi's a master at marketing and getting the word out, and definitely have done campaigns around it. But keep in mind, we are limiting the audience that actually is qualified for it. So by definition, by introducing it in the app is actually our best space, because then we're only talking to people who we know are qualified for it, as opposed to really broad-based marketing. So we really only message to people who it's already enabled in a feature that's been put on their account.
And that allows you to test and learn in a very safe way as you grow and expand this offering. So that's great. I'm curious to see, like, not just specific to SoFi, but the industry trends that you're seeing. Where do you see this space going in the future?
It's a fascinating question. I do think that we will continue to see a blurring of the lines between personal lending and short-term installment payments, giving people more choice that almost become it's just one consistent experience. And instead of thinking and going to like a website to go get a personal loan, it's really more about, I have this need for this amount of money with this kind of situation, and I want to pay it over this period of time. In the back end, then, I actually think that's where folks like SoFi, we can then help serve up the right product and experience, as opposed to needing to know to go to a personal loan, or needing to go to credit card, or needing to know to go to buy now, pay later. Instead, I think if we can walk people really through a few key questions about what they want, how much, how long, we can actually help match the product kind of behind the scenes almost for them, to help them get into the right product.
It takes us to personalized banking.
Yeah, exactly. It becomes a personalized lending solution that can grow and extend and contract and expand based on your needs.
100%. Yeah, I think purchase finance is here to stay. We've seen multiple different variations over the decades, and buy now, pay later is one of the first ones, for the newer ones that we see. Merchants love it because they get paid in full right from the start of the transaction. Consumers love it because, unlike, let's say, a couple decades ago, we had layaway programs. For those of you who have gray hair or no hair like me, you might remember layaway programs. You had to wait until the end when it was paid in full to get the product, but now you get the product right away. And the consumer finance company or the bank who specializes in managing credit risk, right, is the one who takes on the heavy lifting. We don't expect merchants to suddenly become experts in credit. If you even go far enough back in time, your local grocery store where you'd have things on tab, right? And so suddenly you're asking your merchant to know your credit worthiness and how to manage that. So I think all participants in the life cycle love this. I think what we need to solve for, of course, is not making the same mistakes. Like we were talking before about stacking buy now, pay later loans. Revolving credit is a little bit dangerous. There's always that temptation to let your balances revolve, and the next thing you know, you're paying 20% interest and getting yourself into trouble. I think the industry as a whole has to come together. I mean, SoFi sounds like they're managing it within the SoFi family. But the industry needs to get smarter about helping people not get into too much debt. So I do think the future will be involving some kind of credit bureau or external data provider to mature this whole industry. My last comment on the evolution of this is that we're going to see this in more and more places. We started to talk about a little bit about how small businesses are starting to use this, and we're seeing more and more vendor offerings in this space. So this isn't going away. It's going to continue to evolve and mature. It's going to be highly digital in nature, and I think it's going to, has even the potential to take away from some of the other types of credit and lending products that are out there. With that, unless you have any closing comments,
no, I was just going to say in the small business,
yeah.
we have heard there is a desire to have that expense smoothing.
Yes.
And so, in the short term, without having to take out a big loan, that takes time to get and a ton of paperwork and stuff for small businesses, these types of solutions, actually, there's a lot of interest in them as well.
Yes. Especially since the majority of small businesses in the U.S. are sole proprietors.
Yes, there are members already.
Yes,
yeah.
they want to bank like they bank in their personal life, but for their business life. So I can easily see a seamless integration to the other two. But we wanted to open it up to you guys and your questions, your comments, your observations around buy now, pay later, either around the industry or for SoFi or for Galileo. Just let us know. Yeah, please.
We come a little bit too late, so I apologize for this. From which bank you come?
SoFi.
Okay.
Yes.
And the second question, what has happened when it comes to debt, to bad debt? How you handle this?
So we definitely we work through collections, but there is also that charge-off. And the good news is one is right now we're taking such small amounts or we're lending such small amounts, and we know that you actually have the money in your checking account to pay it back. And on average, we're seeing people don't use the full card. It's 3 times the average debit amount, but it's not the full $500 that they're typically taking. So the amount of risk for us is actually very small. And so we're seeing incredibly low losses with this product.
Just one thing to add on, because you may have missed that comment earlier. At SoFi in particular, they don't let you, until you've paid off your existing buy now, pay later loan, they don't let you take your second buy now, pay later loan. So that's another way they're helping to manage overall debt.
And what do you think about Klarna in the US? You have a mind of it?
No, I mean, I think the good news is really what we're trying to do in our industry overall is extend credit appropriately to individuals, and to enable people to buy things that they may not be able to buy all at once. I think I don't want to speak positively or negatively too much about any of our competitors. I do think the point of sale is actually really powerful, but I think we've been able to find a solution that allows us to not have to work with all the merchants in the same way, and to be able to have something that's much more closely associated with your banking relationship, which is core, where you have your trust. It helps for us to build primacy. We want people to continue to bank with SoFi, and the more that we can help them and bring them back into our experience and to provide that value, that's what's really important to us. So.
Last question, when I can.
Yeah. I'll just say real quick before you ask that, because we watch what we call the big three, right? Affirm, Klarna, and Afterpay. In the United States, those are the big three. Number one, you're noticing them being acquired, right? Some of them are also getting like industrial bank licenses. One thing I'm watching for Klarna, right? Because back in the home country of Sweden, Klarna has become a bank. So I'd be very curious to see if they have ambitions of getting a banking license, and what does that do to their whole set of opportunities, right? It opens up a whole new universe, right?
Yeah.
Sorry, your last question.
Yeah, and we are seeing there's some industry data about the acceleration that we had seen about the uptake of the solutions is actually cooling. And so that's, I think, an interesting thing for us to think about, is that one, consumers are getting smarter about the kind of credit that they've taken on. Two, is there a saturation point that other types of credit then step in? I don't know exactly the reasons for that, but it is kind of interesting to see. And I don't know if we're seeing, in a way, kind of an upper threshold of usage or not.
You build a solution, the API to the collection company comes from you, or is it a solution in?
Yeah, we haven't yet built a rigorous collections and recovery system, so it would either be a third party or what the bank is already using. But watch this space, because our abilities in the credit and lending space are going to continue to grow, and we'll just make those decisions about what other parts of the loan lifecycle we want to offer ourselves versus working with a third party.
Mm-hmm.
I have a partnership with SoFi on my e-commerce brand. I work with small businesses. I didn't know SoFi had the buy now, pay later option. We've been using like Afterpay, Klarna. So how do I get this option for my small business owners with e-commerce store?
Yeah, we don't have it yet for small business.
Okay.
So, and in fact, that's right now we work through partnerships to lend to small businesses. Yeah, and that's exactly so. So far, we're focused on individual personal lending and the buy now, pay later. But we've been listening, and we're hearing a ton of demand for both products to be available for small businesses. And so, right now, we'll continue to expand our lending through our partners, but that's something we're listening to.
I will say,
so not yet.
On our side of the house, the Galileo side, together with MasterCard, we have started moving into the SMB space. And as soon as Kelly and the SoFi team are ready to do SMB, we're happy to work with them if they choose to work with us again.
Okay.
Yeah.
So this is just something to pay attention
Yeah.
to.
Yeah.
Other questions? Yes.
So are you white labeling the product itself for other Galileo customers?
Well, so everything Galileo does is private labeled for the brands that we work with. So in the case of SoFi, it's their brand. Galileo, as a software company, if you will, or a SaaS company, we don't actually extend credit to individuals or so. So because we are the technology behind the bank is the one that is not only licensed and chartered to lend credit, but it's coming out of their balance sheet. Right, not ours.
No,
Yeah.
that's what I'm saying.
Yeah, so we're not set up that way at this point. I definitely think as we think about kind of our lending as a service type offerings overall, we're starting to think in that direction. We have not taken, for example, this is a SoFi Bank member end consumer experience. We have not yet taken that and I'll dare say go almost into the commercial payments type space yet.
We do. If we're offering this through what we call digital challengers, right, then often that requires them, the digital challenger either has to get like a consumer finance license, which is usually state regulated, or they have to work with a partner bank in the background that's going to provide like a wholesale line of credit. So we do on the Galileo side have that model where it's sort of unbundled, if you will, between the challenger, Galileo, and the partner bank. But in the case of SoFi, because they're a real bank, right, they don't need a partner bank in the background to do this. Other questions?
Are you guys considering going more than $500? It seems.
In time. Like I said, walk before you run. Yeah.
It's a good opportunity, I guess, to funnel that information, right? That you're working with a really critical generation, to your point, get them sticky for the long run. Taking the information, what are they spending on, all that consumer data, and plugging it back in to expand it. Is that something that you guys are already on the path of doing as well, or is that, I mean, are you doing it already?
Yeah, well, as we talked about a little kind of about would we do point of sale?
Yeah.
We know where our customers are spending.
Yeah.
So we know what categories and or actual merchants would have most benefit to our members. So were we to do point of sale, we would be very targeted and then let our virtual card experience kind of get the rest. So yes, and we thankfully have that visibility and are planning to leverage.
Would SoFi Bank be the sponsor bank or partner bank for the challenger?
Today we have just under 30 partner banks in our portfolio. Not all of them are doing lending, right? Some of them it's various reasons, payments and deposits and all kinds of stuff. SoFi is slowly becoming one of our partner banks now that we're also in the same family. But again, not for every single offering yet. So watch that space.
The one benefit with the buy now pay later that's tied to merchants is the rewards program, the discounts that you get. So are there any plans to offer rewards or integrate with any existing SoFi rewards program that you provide?
Okay, so let me answer that in a couple directions. One is if you are, for example, using the money at Sephora, you would still, it's just a regular purchase from the Sephora end, and so you would earn the Sephora rewards just in their rewards program. Two, rewards are the #1 requested additional feature to have in the industry on buy now, pay later. However, the economics of buy now, pay later don't create a lot of space in the offering itself. I mean, this is a no fee, no interest offering we have right now with debit interchange. And so there's not a lot of room to provide a robust reward system in that space. That said, SoFi has a reward system for banking with us. And so we do reward people for direct deposit. We reward people for their credit score going up. We reward a number of positive behaviors. And so they can earn rewards that can be redeemed actually into the monetary reward back into your SoFi checking account or towards your credit card balance and stuff. So we do the rewards at SoFi, but on the broader relationship as opposed to specifically on the spending within the buy now, pay later card.
And they have this really cool feature of auto redeem your rewards.
Yeah.
You can turn it on, which I really like a lot.
Yeah, because you don't want to forget.
Yes, I often forget. Final questions, comments? Well, we definitely want to thank you all for coming. We are the thing that's standing between you and our cocktail hour, which starts in 10 minutes. Lots of food, lots of drink. You're welcome to hang out, network. We're going to be here to answer questions, whatever you want to do. So we definitely appreciate you guys coming out and all the questions that you had for us today.
Thank you very much.
Thank you.
Thank you.